What if I told you that the modern stock market was not born on Wall Street, but on wooden ships sailing into unknown oceans? Long before corporations, hedge funds, and billion-dollar IPOs, one company changed money forever. This is the story of the Dutch East India Company, the world's first stock market player. In the early 1600s, the world was dangerous, divided, and expensive to explore. Trade routes were controlled by empires, seas were ruled by pirates, and voyages could take years with no guarantee of return. Spices like pepper, nutmeg, and cloves were worth more than gold in Europe. Whoever controlled the spice trade controlled global wealth. The Dutch were late to the game. Portugal and Spain dominated Asian trade routes, using royal fleets and military force. The Dutch Republic had ambition but lacked the resources of empires. Instead of relying on kings, the Dutch did something revolutionary. They turned trade into a public investment. In 1602, the Dutch government approved the creation of the Verenigde Oost-Indische Company, better known as the Dutch East India Company, or VOC. It was not just a trading company. It was something the world had never seen before, a joint stock company. For the first time in history, ordinary citizens could invest money into a company and own shares of its profits. Risk was spread across thousands of investors instead of resting on one ruler or merchant. This single idea changed capitalism forever. The VOC raised massive capital by selling shares to the public. Investors did not need to sail ships or manage trade. They only needed trust in the system. In return, they received ownership and dividends. This was the birth of the modern stock market. To support this innovation, Amsterdam created the world's first official stock exchange. People gathered not to trade goods, but to trade ownership itself. Shares were bought, sold, speculated on, and valued by future expectations. For the first time, markets traded belief. The VOC was granted extraordinary powers by the Dutch government. It could wage war, build forts, sign treaties, mint coins, and rule colonies. It acted like a corporation, a government, and a military force, all at once. This blurred the line between business and empire. With unprecedented funding, the VOC built a global trade network. Ships sailed from Europe to Asia, establishing control over key ports in Indonesia, India, Japan, and South Africa. The company monopolized spice production, destroyed competing crops, and controlled prices. Profit was not earned through efficiency alone, it was enforced. The VOC's success was staggering. At its peak, it was worth more than any company in history adjusted for inflation. More valuable than Apple, Amazon, or Google combined. Its wealth fueled Dutch dominance during the Golden Age, transforming Amsterdam into the financial capital of the world. But the VOC didn't just trade spices, it invented modern corporate finance. It paid regular dividends. It used long-term capital planning. It separated ownership from management. Shareholders could profit without ever stepping foot on a ship. This concept defines corporations today. The company also introduced secondary markets where investors could sell shares before voyages ended. This created liquidity and speculation. Fortunes were made and lost based on rumors, shipping news, and expectations. Stock trading psychology was born. However, the VOC also revealed the dark side of capitalism. Greed, corruption, and exploitation spread alongside profit. Local populations were oppressed. Slavery was used. Violence enforced monopolies. Executives enriched themselves while ignoring long-term stability. Over time, mismanagement grew. Wars drained resources. Corruption eroded trust. Competition increased. Debt piled up. Share prices fell. By the late 1700s, the once unstoppable company collapsed. In 1799, the Dutch East India Company was officially dissolved. Yet its failure did not erase its influence. The systems it created survived. Public shareholders, stock exchanges, corporate governance, dividend investing, market speculation, globalized trade. Every modern corporation follows the blueprint first drawn by the VOC. The Dutch East India Company proved that money could be mobilized at a scale never seen before. That risk could be shared. That ownership could be divided into paper claims. It showed that capitalism could build empires faster than armies. But it also taught a warning. When profit is unchecked, power concentrates, ethics collapse, and systems eventually fail. Today, when you invest in stocks, trade shares, or watch markets rise and fall, you are participating in a system born over 400 years ago. A system created not by economists, but by merchants, sailors, and investors chasing opportunity. The modern financial world did not begin with technology. It began with trust, paper, and ambition. The Dutch East India Company was not just the first stock market player. It was the moment capitalism became global. If you enjoyed this story of money, markets, and power, like, subscribe, and join us as we uncover the hidden history behind the world's financial systems.